All right, guys. I hope everybody's doing well today. Uh, I just wanted to follow up on the original housing shortage video that I made. And in that video, we basically just kind of hit like the high notes of how you would go about to sort of debunk that myth that there is a housing shortage. And I think, especially if you've been in one of these Sunbelt markets or one of these, really popular post COVID hotspots, you could probably just look around and anecdotally just it's hard to make sense of it because there's just been endless construction everywhere, right? That's certainly the case in Nashville and specific to kind of the core area like Davidson County where the downtown area is. Um, so, like I said in that video, it's really hard to make the argument that there is a housing shortage at a national level. Uh, Now, it's impossible to assume that every single market in every single metro area and every single county and zip code is going to look the same. And there's a reason for that. I mean, those dynamics, yeah, I mean, even across a metro area can vary quite, a good bit. So you have to pay attention to what that looks like over time and at a granular level to see what's actually happening. So I want to start out by focusing just on the demographics of what's sort of played out in Davidson County really since about, we'll call it 2010. And this is how I would begin to identify whether or not there is truly a housing shortage. So all I'm doing in this top graph is I'm showing the change year over year of three different variables. Net migration, that is a change. By definition, that's a change, a year over year change number. Again, look at change, total housing units, change in total households. So what I'm trying to do in this visual is basically account for all of the possible inputs that would, in theory, create a tight housing market and thus a housing quote unquote shortage. So before we get into that, like let's just define what net migration is. Net migration is one of the two components, usually the larger of the two components of population change. I mean, think about it this way: if net migration is positive in Davidson County, that could be from somebody moving over from literally a county over. It could be somebody moving into Davidson County from out of state or even from out of the country, right? And that's what gets captured in this net number. So it's net in minus net out, and if it's positive, you have a positive net inbound migration number. Uh, so the reason we're not going to look at the uh, the other component of population change, which is the natural change, is because that is basically the difference, the net of births and deaths, uh, in this example, in Davidson County. Um, the reason we're not going to do that is because just because somebody has, a kid, it doesn't necessarily mean that they need a new house. There isn't necessarily a need for more demand. And if you've looked at, birth rates and stuff at scale across different counties and different markets, and even you can see it at a national level, birth rates are quite low um, in the area. So, okay, getting back to the visual and how we should interpret this, I'm assuming from the get go, we'll call it 2010, 2011, that we are sort of at, equilibrium in terms of supply and demand. So again, we're looking at the change of these components over time. And we're just assuming that the housing stock is at equilibrium from the beginning of this period in terms of supply and demand. So it looks like 2011, 2012, we have a pretty tight housing market. You could argue, hey, inventory should be fairly low. There's a lot of what appears to be net migration and the incremental change in households is outpacing the number of housing units or the change in the housing units. And again, the housing units, that's the entire stock of homes. That is both owner occupied, renter occupied. And again, I made this point before, renter occupied homes are homes, like an apartment, a duplex. That is a home that counts towards the housing stock. And then lastly is vacant housing units. That is combined, that is the entire housing stock. Okay, so anyway, moving forward in this analysis, it pretty much looks like to me around 2017, there's maybe a surplus of homes. And I would argue just by looking at this chart, and again, this is not the most dynamic data. The data that comes from the census is this particular cut is best you're going to do at this granular of a level is a annual estimate. It looks like 2017, through about 2019, we have basically a surplus of homes. And even if you look at that, the blue line, net migration, it's actually negative in 2017, right? That's kind of interesting. So then we all know what happened. COVID happened, right? And all of a sudden, we had all these people form new households. That would be like somebody who may have lived, we'll just use the sort of cookie cutter example, lived in their parents' basement. Now they have all this, and they're a recent college grad or whatever, and now they have all this extra money to now go and get themselves an apartment, right? The population hasn't changed, but now you have one more incremental household. Okay, do we see how that works? Then you see that the change in the household growth really slowed down into 2022. But then you're also seeing net migration bounce up and go actually positive for the area. But do we think that that's a sustainable trend? And here's what I'll tell you. Two things. Household formations slow down, as well as net migration in rate hiking cycles. And let's just think about that intuitively. People cannot relocate as easily when they lose their jobs. And believe me, I don't care what they say on CNBC, the labor market is weak. The way in which the unemployment rate is calculated is very mechanical, and it is not capturing what is actually transpiring in the housing market. Okay. Or not in the housing market, in the labor market. So household growth slows because, especially now, inflation's terrible, right? So what do people do? They again, like I've said in the previous video, they basically combine their resources to pay for more expensive things like housing. So that move in household formations that we saw basically from 2019 to 2021 is not a sustainable trend. But as you can see, this data is not like that particular chart is not the most dynamic data set. It's annual year-over-year change in these factors. So I need to confirm whether or not that's actually correct. And guys, there's a bunch of different software providers out there who have information like this that's a little bit more real time. But if you're just looking at census data, like this is going to give you a clue as to whether or not there truly is a housing shortage. So, okay, let's move on to the top right chart and see if this theory is actually going to, pan out. So, when I look at this chart, and we'll start at the top chart up there, which is all I'm doing is comparing inventory, which is in the left hand side uh, of that top chart, to homes sold. Okay, volume leads price, right? So if homes aren't selling, inventory is gonna go up, active listings are gonna go up. That is a clear sign that you have a demand problem. So what would I expect from that? I would expect that you would see things like, the sale to list price ratio, be under 1. And all I'm doing is basically showing that in the chart, or in the graph below, up in that same right hand graph. You're seeing median list price diverge from the median sales price. I mean, do you see that? That is sellers being delusional. That's what's happening. They're they're diverging because the price is just too fucking high. That's it. Um, Also on that bottom chart, I'm showing months of supply, which is really all that is the top chart up there, inventory divided by homes sold. That'll get you months of supply. It's best to look at as many variables as you can when analyzing whether or not there's weakness in, a particular market, but this is a good start. Uh, so it looks like my theory, based on just looking at the demographics, is playing out. So inventory, as you can see, really just drops off a cliff beginning, we'll call it mid 2020 to 2022. And now it's bouncing back because, again, rate of migration is slowing, household formation is slowing, all of which puts pressure on home prices because the demand is just not there. Okay. So let's go down to this bottom left hand chart. And this chart, now we're looking at metros. Up until now, we've been looking at just Davidson County. But here's the one thing that just really kind of drives me insane when I talk to people about real estate data. They assume that I'm only looking at one market, or maybe they think that that their particular market is representative of the entire country, and that is just absolute horseshit. I mean, you cannot assume that one particular market is going to be perfectly representative of, we'll call it, the United States, or even, you know a certain census region. You just cannot expect that it's going to be perfectly representative. My point in saying all of this is, just because I'm showing you, like, in the top, two charts, just one county, I'm looking at this at scale, and that's the only way it should be done. And if people are not looking at scale, and if they're only talking about one market, and if they're only looking at like a 3 or 4 month period and trying to extrapolate a trend from there, that's a bunch of horseshit. So just don't listen to people like that. All right. Sorry. That being said, you're probably wondering, and I alluded to this earlier, why we're talking about rent vacancy rates of all things. Like, what is going on here? Why are we looking at rent vacancy rates? And like I said from the beginning, uh, renter occupied units are part of the housing stock. In Davidson County, it's like, I want to say 46%, according to estimates, of all occupied units. That's quite a lot. People at the end of the day have a choice. Do I want to rent or do I want to own? And right now, it makes more sense financially for people to rent. Do you really want to get locked in at these prices for 30 years on a home? No, you don't. And we'll talk about that separately. But so again, let's just focus on this bottom left hand chart. This is telling me that rent vacancy rates, more or less, they started to, we'll call it gradually tick up, right around until we'll call it early 2020. And then suddenly they just plummeted pretty much everywhere. And around 2022, they started to move up meaningfully higher in a lot of these cities. Well, back to the original demographic chart, that is an indication to me that household formations are slowing and that net migration is likely slowing for a lot of these cities. Otherwise, why would a building suddenly become more empty? So, if a building is getting more empty, then that's going to put pricing pressures on rents, and that will eventually flow through to home prices because you cannot look at rents versus you know home ownership costs for a given area in isolation and assume that they're not connected. That's just anybody who says that, they're like huff and glue. I don't know what they're on. Okay, so anyway, you can essentially see this in the chart. What I'm essentially telling you, as we've observed with rent vacancy rates, as they tick up, as they break out, that puts pressure on rent prices. You're seeing it. That was a one-time move. This is all a one-time move. I want to reiterate that. Net migration slows. Household formation slows in rate hiking cycles. This is all a one-time move. I mean, yes, you have a lot of different dynamics at play now. This work from home arbitrage, things of that nature. But to suggest that we're going to have this continued growth is not supported by the data. It just is not. There are other inputs into sort of this analysis. There's a lot more that I have behind the demographic piece where we can look at age ranges in terms of renter occupied units versus owner occupied units. We can look at things like, how many households are paying 30% plus of their income towards rent or even home ownership in a given area. There's a lot that goes into this analysis. I mean, even like the permitting data. I mean, all of these things need to be considered when you're kind of evaluating whether or not there is a housing shortage. And I'm telling you with a good degree of confidence that it is just insane for somebody to tell you right now that there is a housing shortage, especially in Nashville and especially in Davidson County. It's just bullshit. Okay, we're looking at data. All of this is publicly accessible. It's free. All I've done is just trend it. The reason I do this stuff at the end of the day is because I'm sick and tired of all these pundits on TV lying, just literally lying out their ass about actually what's happening. Guys, we have to understand that a good portion of our economy is tied to people's biggest asset. And for a lot of households, that's their home. If your home continues to go up in value, you will continue to spend. 70% of our economy, our GDP, is tied to consumer spending. So if you think about that logically, the government really doesn't have a lot of incentive to let home prices fall, right? So that's what's happening. If somebody tells you otherwise, they don't know how the economy works, period. That's what's going on. I just want people to look at the data, let the data be your guide. And I just don't want people to make poor financial choices. Period. That's it. So, I hope you guys found this video helpful, and I'll probably make some other ones where I kind of flesh out some of these other data sets I've been talking about to really kind of drive the point home. But I think that this is probably a decent sort of stopping point for now. So, all right.